All right, good morning, everybody. Today is Wednesday, July 30th. Market is opening in 30 seconds. So today we have FOMC in the afternoon. So I'm not trading in the morning session. So I normally say that one of the days that I don't trade during the morning session is the day we have FOMC with the press conference in the afternoon, which is today, 2 p.m. and 2:30 p.m. Eastern time. So I'm not going to be taking any trades in the morning. I can mark them up for you guys, but personally, I am not taking any trades. So for the breakout or for the opening direction in the market today, it would be a sell. I'm sorry, it would be a sell. Yeah. So it would be 50 point stop loss, 100 points TP, because again, during market open, we are looking for uh and again, I'm not taking any trades this morning whatsoever, but during the opening session, we would be looking for, you want to look at what EMAs are the majority of the EMAs that are there before market opens. So if the majority of EMAs are red, you just take a sell 50. I took the breakout yesterday for a sell and it hit TP. I think yeah, it was a sell yesterday. So same thing today. Price is majority uh in a before market open, we had majority sell side EMAs. So this would be the opening one. Let's see, we also just formed two SARs here. Just a second. This is going to happen so fast. Is there a Yeah, yep. So the 15-minute 646, let me see. 647. No, it's invalid. Yeah, so it's invalid because so here, if we look at the SARs that were formed, we formed a 15-minute SAR and 30-minute SAR. So the 15-minute one was at 647, 44, 647. So 10 points past that would have been 637, but price did not get to the 10-point threshold. So the buys would have been invalid, or the entry there would have been invalidated. Um, so this is, and again, the market open, I only take it on one account. But again, today, I'm not taking any trades in the morning session. But we can just follow some of them to see. And the reason for that is, and I'll probably show you guys statistics for that. Anytime I've traded the Wednesday with the FOMC minutes release in the afternoon, it was like I had three back-to-back losses in that day because you expect a lot of manipulation and um, lack of volatility in the market. So this, and I'll just save this in future. Save as market open, and I'll just put this here. All right. So again, I'm not taking any trades. So I'll just mark things up, but personally, I am not taking any trades. If I do see a good one, like I'll let you guys know, but whether it's a win or a loss, I am not taking anything. Maybe I can do a live stream in the afternoon, but yeah, for today, the morning session, I'm not taking any trades. Let's see. So market open. So today is Wednesday. So we have the pre-market low. We already tested today's pre-market low. We haven't tested the pre-market high. So we have a pre-market high at the top there. For SARs, I really don't see any entry. For EMAs, no entry here. Uh, And here looking at the price movement currently, you can see we do have the bullish order blocks, and you can see how price is rejecting off of this bullish order blocks. So price can easily swing back up. So for the market open entry, you really don't care whether you're in a supply zone or demand zone. It does help, but you really don't care whether you're in the supply zone or demand zone. You really don't care whether there are order blocks around your entry. For the market open entry, you're just looking for the majority of the EMAs that are before market open. Let's see. Let's see. Let's see. So we've closed below the EMA. If price comes back up, there is a sell entry on the 15-minute EMA one. If price does come back up, but again, today morning session will just mark the setups, and won't take any trades in the morning. But anyway, so let's observe here, right? So, and we can just use today as like a practice or just like forward test without taking any trades. So if I put our requirements here, so we first put our confluences. This one's is too big. Um, what? Save as. All right, so we have our confluences there. Then we have our entry models, which should be this is annoying. All right, so we have our confluences there. We have our entry models. Oh, where is that from? Um, Oh, never mind. All right, so I did say also DAX moves similar to or respects SARs and EMAs for US30. So let's see if there would have been any entry this morning on DAX. So the market open for DAX is 3 a.m. Eastern time. Let's turn the zones on. Let's see. Uh, this would have been an entry here. 63.53. Let's see. The 10-point threshold would have been. Actually, it wouldn't because it didn't get 10 points past 63.53. Nope. Yeah, that was invalid. Okay, so US30 market open would be almost at TP. So again, market open, same thing with the threshold entry, you're going for a 1:2 because there are days that for some of these entries that are very volatile, you want to go for 1:2, or some of these entries where you don't have a lot of confluences or confirmation, you want to go for 1:2 in order to, uh, you know, um, in order to adjust for the days where price will automatically go to your stop loss. So for the account that I've been doing this one, I think last week wasn't the best week. I think it had like a break even because like I think 2 days I had losses on this one, and then one day I had a win. So just ended up at break even. Yesterday I took one. So yesterday's market open entry was a sell. It went straight to TP. And today's is a sell as well. It's almost at TP as well. But yeah, so this market open entries, you just want to look at what are the majority EMAs before market open, like literally before market open, and then you enter in the direction of the majority EMAs. So again, for DAX, let's see here, there was a sell entry 705, not too much liquidity actually for DAX. It's not meeting the 10-point threshold. This one, 46 minus 10, 36. So even this one came a bit close to the 10-point threshold from this 15-minute SAR. Sell SAR, but nothing there. There's another 15-minute SAR up here. 96 plus 10 or 97 plus 10 should be 707. It didn't reach the 10-point threshold. Uh, Now this 30-minute reached the 10-point threshold. Yep. So this 30-minute here, 8:30. Yep. So this would have been the afternoon session or end of the afternoon session. So this one would have been 703 plus 10, 713. So literally at the top there. And then you go for a 1:2 risk to reward for the threshold. So this one would have hit TP, and maybe some of the others for the structure change and trend change would have hit as well. So yeah, so DAX is another good one for the people who are awake during like London session. Um, yeah, I don't see anything else. Let's look at the market open for DAX today. So we have 3 p.m. or 3 a.m. Eastern time. Okay, so you see here, so today for DAX, if I was trading DAX, so this is 2:30, go back one. Okay, so 2:30, 2:45. So here we have what? one, two, three, four. So four EMAs. Price is above or had closed above one, two, three. So here I would have actually taken a buy. I don't know why I did that. I would have actually taken a buy, but it looks like this would have ended up in a loss. Let's see. 500. So the market opened for DAX today. Yeah, market open for DAX today would have ended up losing. Yeah, so market open for DAX today would have ended up losing. All right, and full TP on the US30 market open. So again, for market up, if I replay this, if I go ahead and replay this, you'll see that before market open, so this was the 9:15 a.m. candle, but before market open, look at the majority of the EMAs that are around price. So price is right here, right? And price is nearby one, two, three, four EMAs. Three out of those four EMAs are red. So that is all you need. So if here it was two EMAs are red, two EMAs are green, I wouldn't have taken that. I wouldn't have taken either a buy or sell. If majority of the EMAs here were green, then I would take a buy on market open. If majority are red, in this case where majority were red, I would, would take a sell. Sometimes price is going to be in an area where there are no EMAs. So the key thing for the market open entry, you want to make sure that you want to make sure that the candle before market open, you have EMAs touching that candle. Because, for example, sometimes price can be in an area where there are no EMAs. So for example, let's assume this 9:15 candle was right here at 44.7, at this blue line. If during market open, the candle was here and this area did not have any EMAs, of course, doesn't have any EMAs around, I would not look to take the market open entry. So the market open entry is not an entry you take every day. It has, there has to be EMAs around the candle before market open, and then the color or the color of the EMAs, meaning if price is above an EMA or below an EMA, that is what's going to give you the direction you need to take for the market open entry. And then you go for 50 points stop loss and 100 points take profit. So you can see here, this one would have hit TP on that one. The other thing to note, like let's do a quick recap of yesterday's. So yesterday was a little tricky, but let's see if, let's see. Let's replay yesterday's move. All right. Uh, so let's replay till there. So you can see here, here there was a bunch of EMAs, and actually when the market opened, this EMAs turned red. So again, when I run this forward, it will be a bunch of them. But so you see, like when I was saying, you want to make sure that the EMAs are touching the candle. So like yesterday, majority of the EMAs were red before market open, right? And once I play the next candle, you'll see that I think this top two will turn red. But if you're in an area where you don't have any EMAs and majority, so for example, this particular one would be a good example. If you're in an area before market open where you don't have any EMAs, but majority are red, don't just take a sell immediately the market opens. The only time you want to take a sell immediately, or a sell or a buy immediately the market opens, is if you already have EMAs touching the candle before market open. So you can see here, the candle before market open, there were no EMAs touching it. So you don't want, as much as most of the EMAs around it were red, you don't just want to take a sell automatically. So for example, I'll show you here. If this one, we did that automatic sell, I think it did survive. Yep, it did survive. But one thing I want to show you guys here is that you want to see, observe this market open candle. So you observe this high that's right here. Observe why price went here. So if I replay this, as much as this one, if you would have taken the sell immediately the market opened, it would still have hit TP. For me, I waited to take the sell up here. And the reason I waited for that is if we go ahead and replay this, you ask yourself, where is the top EMA? So where is the most optimal EMA? So the most optimal EMA is this particular one right here, 30-minute. And I think there was the hourly EMA one also changed. But if I, again, backtesting EMAs is a bit tricky. But if I play the next candle, I believe, yep, you see how that hourly changed? So for me, I was targeting this hourly EMA because on market open, this EMAs turned red. On again on market open, this EMA's turned red. So yesterday, the hourly EMA was actually the higher EMA. So the hourly EMA, if I remember, it was at the 44,900 and then followed by the 30-minute EMA, etc. So for me, I actually entered this sell here. And then, right, so I saved myself a bit of drawdown. But the idea is if during market open, if during market open, the candle before market open is not being touched by any EMA, but then you have majority, the nearest EMAs are majority green. If the nearest EMAs are majority green, don't take, if the nearest EMAs are majority green and there are no EMAs touching the candle before market open, don't enter the buy immediately the market opens. Wait for price to shoot down to one of the green EMAs and most likely, probably the lowest and take your buy right there. Same thing with the sell. If during market open, uh, wait. So this is, let me see, 15. Um, 680, 680, 680. Give me a second. Okay, never mind. No buy, no sell. 945. Uh, okay, never mind. Yeah. So same thing for a sell during market open. If the candle before market open is not being touched by any EMAs, and then you have majority, the nearest EMAs are majority red, don't enter the sell immediately on market open. Wait for price to shoot up, most likely to one of the red EMAs and take a sell there. So the only time you want to enter on impulse or you want to enter exactly at market open is if the candle before market open is being touched by EMAs like today, is being touched by multiple EMAs, and then you just look at majority of the EMAs. Are they green? Are they red? And then you take your trade in that direction. And here I expect price action to start dying down when we are nearing like 11-ish, 11 p.m. Eastern. So you can see today, right? It's a heavy news day. So at 10 a.m. we had the pending home sales. Let's see, I need to keep resetting this. So 10 a.m. we had the pending home sales. At 2 p.m., right? That's the big one. So this is the reason why I'm not trading this morning. Federal funds rate at 2 p.m. and then the 2:30 p.m. is the FOMC press conference, right? So once they release this at 2 p.m., of course, there's going to be some sort of volatility, and at 2:30 p.m. also a lot of volatility. Now, in the afternoon, this is I don't change anything when I'm trading heavy news events like that. So the only thing for heavy news events that I do is, so let's assume that this is the 2 p.m. candle, right? So assume this is a 2 p.m. candle. And I'll see if let me see, maybe I can do a live session then. Yeah, maybe we'll see. But anyway, so let's assume this is 2 p.m. So I don't take any trade until price hits 100 points. So let's assume this is the 2 p.m. candle. I give myself an allowance of 100 points on US30. Because if you have such a heavy news event, you can have not even 1 minute candle, 1 5-second candle pushing 100 points, pushing 60 points, pushing X amount of points, right? So why do I give myself the 100 point threshold? I give myself the 100 point threshold so that if any SAR or EMA or pre-market high and low is within this 100 point threshold that comes up within this 100 point threshold, and here I'm just assuming that the move during a heavy news event is a buy. So same thing for a sell, right? You just have to do the opposite. So if any SAR, EMA, or pre-market high and low comes up between 100 points of the news event, right? 100 points from the news event, I'm now taking that trade. So any SAR or EMA or pre-market high and low that comes within that 100 point region, I don't take it. So I only take, so that gives me like about maybe 5 minutes or 3 minutes, or sometimes even the same 1 minute, because some candles will push away 100 points or more, right? But you want, because when you're scalping or when we are doing this rejection scalps, we are counter trending, or well, we are, yeah, we are trading against the trend, right? So we are counter trading. So you want the trend to be exhausted because, again, when we are doing the scalp, we are only looking to capture like such a, such a move here, like such a small move here. So of course, if you're trading a heavy news event, this move right here can be your 20-point stop loss, because my rejection scalps on US30 at 20-point stop loss. So this 20-point stop loss is going to be decimated by 1 5-second candle. So you want the move up or down to be exhausted first before you can start trading. So for me, at 2 p.m., well, actually, I start trading at 1:30 p.m. and 1:30 there really isn't no much market movement. So actually, I'll probably start trading at 2 p.m. So for me, at 2 p.m., I will wait for price to push up 100 points. And mostly it's like in the first 5 minutes. So let's assume that in the first 5 minutes, price pushes up 70 points and the 5 minute candle or 15-minute candle closes there. So at that point, I can take any trade that comes after there, right? So you want to see the first 5 minutes of the news event. How high is that 5 minute candle going to go? Or even the first 2 or 3 minutes, because if it's going to be a big candle that's going to go for 100 points or 150 points, you can easily tell because that candle is going to be pretty huge. But if like the first 5 minutes, the first 3 minutes, the push has gone up to maybe 60 points, 70 points, and then it closes there, then at that point, I can look to trade an SAR that comes after there because, price will have already shown signs of exhaustion. So you can tell when price, has shown signs of exhaustion. But anyway, so that's what I'm looking to do at 2 p.m. Later on in the day. If I do have time, we will do a live session there or a live session then. And yeah, so that's pretty much it. So yeah, so for today, and actually even today there wasn't any SAR or EMA trade entry so far since market open. So the only one that I might see coming up is a 15-minute SAR entry, no, 15-minute EMA entry. So if in the next 6 minutes this candle closes below this 15-minute EMA, that will be a sell entry for something like this. But again, I'm not taking any trades um, in the morning session. So a couple of my accounts are almost passing different phases. So I think in the last week or so, I've passed. So let me move this one there. In the last week or so, I've passed phase one of like three challenges. So let me pull them up here. Um, let's see. And we can go over them quickly. All right, so again, for me, I normally have three main accounts. So I have an account that takes and where was that? I have an account that takes model one, which is the 10-point threshold. So, I have an account that takes that and copies to like three other accounts. I have an account that my other main account takes model two and copies to, I think, four other. Actually, wait, I have a screenshot right here. So for model one, one main account that copies to four other accounts. So model one, I'm taking uh, five accounts. So five accounts are taking this trade, and that's the one that takes 1:2 risk to reward. Model two, I take it on model two is the trend change. I take it on four accounts. And model three is our safest entry, which is the structure change. So model three, I take it on four accounts. So in total, I have four plus five, that's nine. Nine plus four is I have 13 accounts in total. So that's how sometimes I'm able to pass, in one day I pass maybe like three or four accounts. But anyway, so here you can see this is a top one account I had. So again, this account I got it last year in make sure. So there's really nothing happening. So this account I got it last year during the Black Friday sale. So this account I just had it in order to test out so this was when we were trading the SAR levels rejection entry, which we were trading on the 1 hour time frame, 4 hour and daily time frame. So you can see it took me about 8 months to pass this account, right? But personally, I don't trade in the month of December and January because I normally it's just my vacation time, so I don't trade in December and January. So you can see when I got it in November, in December there really wasn't any trading on it. I think I'd only taken one account, one trade or two trades when I got the account, which were a winner. And then you can see between December to January, I really didn't take any trade right there, other than 0.01 lot sizes to keep the account running. And then when I got back from vacation, you can see I started trading it. I was on a hot win streak from 127K to about 131K. But then, I had a losing streak here for the SAR levels rejection. So the SAR levels rejection was one of the strategies that were very profitable last year. But then, it did have a bunch of issues with it and lack of, good confluences. So then in May of this year, I transitioned to trading this account. So it had already come down to about break even and actually 2K down. So on 5th or no, no, what is this? May 7th. This is when we started actually, on February and March is when I came up with the SAR rejection scalp, which was a variation of the SAR levels rejection. So you can see from May, and you can see that equity curve, right? So started going up, up, and up. So typically, right? So if you count May, So May, so it took me about 2 months to pass phase one. Now the reason for this, so mostly I do in most of my accounts, I risk 1% per trade, but with some of these brokers, you're not able to do, especially if you're scalping, you're not able, or the leverage is not enough to do the 1% risk. So this one, it's 100K, actually 125K account, because they had like a 25% bonus during the Black Friday sale. But this account, I think I can only risk 500 per trade with my 20 point stop loss, 20 point TP on US30. So the only way I can risk 1% is if I have a wider stop loss. But for me, since I'm scalping, I don't need a wider stop loss. So for this account, I was only risking 500 per trade. And I was doing what model three, which is the structure change, which is our official, you know, trade that we use to count our metrics. So this one, I was just risking 500 per trade. And you can see that steady equity curve. If I was risking 1% per trade, or if the leverage allowed me to risk 1% per trade, I would have already passed this account maybe in like a month. But anyway, so yeah, so this account took me a little while, but eventually I'm now in phase two. I think right now in phase two, I'm at break even. So maybe will take me a month, if not less, if everything goes well to pass that one. And then the other one I passed the other day or yesterday was this Alpha Trader. So Alpha Trader, I think a month or two ago, they came up with this challenge where you don't have to, you only pay if you pass. And then I think they had a bunch of people apply to it. And then right now it's like you pay $150 upfront and then you pay the balance if you pass. But anyway, so for me, I was fortunate enough to get in when they didn't even require an upfront fee. But anyway, so for this account, it took me. So you can see here, this account, I think I was doing the model one. So this account, I was doing the threshold entry, the 1:2 risk to reward entry. So you can see that's why the average loss is about 900, average win about 1400. Um, and this one took me, let me see. So I started trading it June 26th. So it's literally taken me like a month to pass phase or to get 5%. So this one they only have like a 5% profit target. And once you pass it, it's like it's not instant funded. But anyway, so they only have a 5% profit target. You pay a small fee upfront and you pay the balance once you complete it. So the only issue I don't like with this one, so it had like a 5% overall drawdown, I think, if I'm not wrong. I think, yeah. I think it has a 5% overall drawdown. So during the challenge phase, you have a 5% overall drawdown, which is static, and then 3% daily drawdown, which again is static. But once you get funded or once you pass the account, like for me, this one I've already passed the account and I need to pay in order to get the funded account. Once you get funded, it's 5% overall drawdown and 3% daily drawdown. But once you do get funded, your drawdown is trailing and not static. So that's another issue I have with this one. It's not really the best. But let me see. Let's go to their website real quick. Alpha Trader. All right, so we go here and we go here. I think it's called, what is it called? Yeah, it's called the pay later challenge. Okay, so here it is. So this is the one I took, right? So profit target 5%, which is why you can see here, I made that profit target 5.1%. Challenge duration unlimited, no minimum trading days, maximum loss 5%, daily loss limit 3%. Nowadays, you have to pay 149 before you start for a 100K account. I think it's only 100K account. You can trade news, you can trade during the weekend. After you achieve the 5% target, of course, you pay the balance. The account to me is a bit highly priced because I think the total fee I have to pay is like $700. So I think that's a little high for especially an account that they're giving you trailing drawdown. 700 for a 100K account, as much as you only need to meet 5% is a bit, to me, is a little higher compared to some of, because I know Top One also has an instant funded account that's $400 or something. And I think even for them, they have the trailing drawdown. So for me, this one for Alpha Trader is a bit high. But anyway, so here, this is where I really don't like, I do not like, I do not like challenges that have trailing drawdown because sometimes so you can see like for me, right? So sometimes as much as you have a steady equity growth curve, sometimes you can get like a losing streak. So and that is right, that's pretty common for any trade setup. Uh 84. Yeah, that's pretty common for any trade setup. So I really don't like the trailing drawdown. But anyway, so for this account, I was risking there is a 15-minute SAR up here. So let's see. So we do have this 15-minute SAR. Again, I can mark it up and we can just trail it or track it, but I am not going to take any trades in the morning session. So I'll call it 26 plus 10, 36. So the 10-point threshold is all the way up here. So we've already hit the SAR, so the 15-minute. And remember, 15-minute EMAs that come up during market open are okay. So should have been somewhere up here. Let me see if it's gonna come back. I had given it a little wiggle room, but this would be the 1:2 entry, the 1:2 risk to reward entry. And technically I would consider it running, but anyway, I think price will come back up here. But my calculation was off. So anyway, either way, that should be running the 10-point entry. And then, so that's model one. It might come back. And then, so model one, model two, model three. So if you see a red candle here and it closes, then that's when you'd enter model two, the model two entry. So model two entry is the trend change. So so right now the trend is green and we're looking to sell, or we would be looking to sell if we were actually trading. So the 10-point threshold has already been met. So that would be your 1:2 risk to reward entry. And then you would wait for the trend change. So for me, I entered three trades, three separate entries on one trade setup. So model one is already going. And then if I see a red candle close on the 5-second, then I would enter the 1:1.5 risk to reward. Okay, so still no red candle based off of trend. And I'm not talking like the basic bearish candles or bullish candles. It's, the color of the candle inside based off of this indicator that we're using. And my trading view, of course, is frozen. So you can see some of these things that happen during such days where we have heavy news. So the reason I don't, and let's see if we get that. But again, I'm not taking, so there's the red candle. So that would be your 1:1.5 entry. And then your structure change is right there, right? So structure change, you're waiting for, if you're looking for a sell, you're waiting for this red X. And then you enter on that candle close. Trend change, you're looking for the first candle that's going to close that's opposite the current trend. So if you're looking for a sell, then you would wait for the first red candle, which was this one, and then you enter right there. Now, the reason why I'm not trading this morning is because during such days where especially we have that FOMC in the afternoon, is price takes a trend. So price starts trending and it doesn't trend heavily. It trends slowly, slowly by slowly. So what this might happen, or what might happen here is that we might start getting small trends to the upside, not like sharp trends, but small basic trends. And this is what will stop you out. So again, in the past, this has literally stopped me out two back-to-back months trading on the Wednesday of FOMC. So I learned and I can show you guys that in my journal. Like I ended up taking three back-to-back losses. But then when I looked at the afternoon session, I realized that the afternoon session had actually better trade entries. So the afternoon session where the news is actually being released, because again, keep in mind the the kryptonite or the downfall of my rejection scalps is a trending market. So you don't want to trade in a trending market. So the moments leading up to heavy news, that's why I don't like heavy news events that are after New York Open. I prefer NFP because it's literally before New York Open, right? It's before New York Open, so I'm not in any trades because I start trading at New York Open. So for me, I prefer news events that are before New York Open because if it's before New York Open, I can trade New York morning session and afternoon session. But if there are any news events within New York session, that is a red flag for any of or for the our rejection scalps. And if we go right here, you can see if we took these trades, that would be a loss right there. So we would be starting the day off at a loss. So again, this is why, and I'm glad actually this happened this way. But anyway, so what I would anticipate here if this has happened, and keep in mind, 15-minute SARs as we know them, 15-minute SARs that come up during New York Open or during the New York morning session, they normally signify reversal. So here, we are not even respecting that traditional reversal that's brought in by a 15-minute SAR. So that's why, again, you want to avoid trading the morning session when we do have FOMC. I think it's the only one. It's the only event that comes up during New York session, the FOMC with minute releases. So there's two types of FOMC releases. So there is this one that has the funds rate release at 2 p.m. and then the press conference at 2:30 p.m. That's the biggest one. There is another one that's only the FOMC meeting, the FOMC minutes release, and it's at like 2 p.m., but it doesn't have a press conference. So for that one, I normally trade the morning session because I really don't care about that one. So the one I care about is this one that has the press conference because you have the rates are released at 2 p.m. and then at 2:30 p.m. the chairman of the Fed is going to come and talk about why they chose to either keep the funds, or I'm sorry, the rate as is, or cut the rate or increase the rate, etc. So the press conference gives like kind of the direction of how markets will look like over the over the next couple of months or the next month or year or quarter or whatnot. So for me, this particular one, this is the reason why I do not trade the morning session when we do have this one. And again, the afternoon session is normally good. The afternoon session for this is normally good. And I'll see if we can go to my trading journal and we can review some of those times. But you can see here, we would have gotten faked out and then lost that trade and then ended up coming back whenever. But I still think US30 will keep pushing up. If price starts trending right now, I think we'll still end up pushing up. But anyway, so if we go back to this particular entry right here, or this account right here. So this account, I think risking I was risking $500. I was risking $500 per trade. Oh, I think I was risking 1,000. I don't remember. Let me see. I think I forget how much I was risking. Wait. I think I can see. Give me a second. I was risking. All right. For this one, I was risking about $800 per trade, which was a bit high, because I forgot that I had a 3% daily drawdown and 5% overall drawdown. Because when I won, I was winning, my wins were between, so if we go back here, average win 1400, average loss 960. So I was risking, I think, about between 750 to 1000. So I think right now, since I'm funded with them, and I have a trailing drawdown. And you can see here my equity growth was actually nice. Was nice. There's a day I came close to losing the account here because I forgot that I had like a 3% daily drawdown and 5% overall drawdown. But yeah, so for this account, since it has a trailing drawdown right now, I'll just risk on my funded, I'll risk $250 and I'll keep trading the account for 1:2 risk to reward. So yeah. So I'll risk 250, which is 0.25% per trade. I can still risk $500 per trade, and I might risk $500 per trade actually on this account. We'll see. We'll see. We'll see. Yeah, but I just don't like the trailing drawdown because if you do have a losing streak, you can blow your account easily because of the trailing. But anyway, so that's the one that I have. I think it's pretty cool, but I just think their fees for that one are a bit high. And then the other one I passed yesterday was Blue Guardian. So Blue Guardian, I have two accounts. I have a 200K account that's almost passing phase one, and this account is a three-step. The Blue Guardians accounts are three steps. So this one again had a 6% profit target. I think each phase is you have a 6% profit target. So this one, it took me, so I started trading it 16th of June and I passed it yesterday. So it took me about a month and a half to pass it. So you can see here, um, had what minimum trading days. So I traded this account for I think 10 days, it looks like. So 10 days overall, number of trades 52. So if you remember, during when we were looking at my journal, the average amount of trades I take per model is 50 trades because even when we were looking at my journal and we were doing the what is it called? We were doing the simulation. I found that I take about 500 trades a year. So you can see here, I took 52 trades in that span of whatever a month. Average losing trade 674, average winning trade 1,192. So this one you can see I had like a 1:2 risk to reward. Sometimes with some of these prop firms, especially the ones that are using Trade Locker, the slippage they try to slip you with profits. But the best thing if you have a strategy that has a high win rate, like the slippage is not going to affect you too much because they try to take away they try when you lose, they slip you more into losses. When you win, they slip your profits so that your profits are less. And that's what I noticed for some of these prop firms. They've tried to do that to me a couple of times, but since my win rate is consistent and is high, like eventually I end up, passing this accounts. Because here you can see if my average losing trade is 674, my average winning trade should be, about double above that because you can see here, average risk to reward is 1.7, but I normally take a 1:2 risk to reward on this account. So you can see they are slipping me about 0.23%, which is high, but if you have like a consistent strategy, then you should be fine. So you can see even in my journal right here in my trading days, you can see I started trading it July. Actually, I actually started in July. I started trading this July 16th. There's no way I've traded this account. Interesting. Okay, I guess I've traded this account. I think I've passed this account then in 2 weeks. So I started trading it July 16th. Had a win there. I didn't trade it, or these other days may have been break-even days or something, or I guess I didn't trade them. And then had some winning days. Had I think this is one of the days I had three back-to-back losses because I lost about 3,000 on this account, made 1,900 the next day, lost 400. And then the last like three or so days I've been on a winning streak. So $1,000 there, 1,700 there. 32, this one was just to pass, because I came so close to getting to 6K, but I didn't get there. So I had to take like a micro lot trade at the end of the day yesterday and made that 32 bucks. So I still have one more Blue Guardian account. Again, it's a 200K account that is almost at TP. I'm sorry, that's almost at the target price. So the 200K target profit is 12K. I'm up 208K. So I'm up 8,000. And I realized for that account, I messed up my lot sizes. So actually, I should have passed that account, you know, way, way back. But anyway, I just need $4,000 more to pass that account. So it should be fine. I have an E8 account. I think I had posted that in the Discord yesterday. I have an E8 account that's almost done with phase one. So you can see E8 here. I've traded this account for 28 days. I'm at 17K profit. I just need 3K profit. So this account for the E8 account, it's taking the Model 1 account, Model 1 entry, which is Model 1 account, which is the threshold, the 10-point threshold, and goes for a 1:2. So you can see for this account, started off a little bit in drawdown, came back up, recovered, came to about 210K. Now, this is the week where I had a losing streak on the 10-point threshold account, which is the Model 1 entry. So from 210K, I went all the way down to 195K. So I almost, right? That I lost like 15K, but this is why, again, when I talk about I don't like firms that have trailing drawdown. If I had a trailing drawdown on E8 on my E8 account, I would have lost this account. But since I'd already built like 10K in buffer, my overall loss was still at 180,000, right? So because it's a 200K, I have I have a 10% overall drawdown. So my max drawdown for this account is 180,000. So you can see if you have a losing, like my strategy is good, right? I did have a win rate right here or a nice steady growth curve. But when you get into a losing streak, that's when any firms you have with trailing drawdown, that's when you get, that's when you can lose your account easily. But you can see here, I went all the way down to 195,000, recovered from 195,000, came back above 200K, went to 210K, had a bit of a losing streak here because there was, last week wasn't the best with the, oh, actually, 2 weeks before that wasn't the best also with the Model 1 entry, but you can see here, now I'm back to, that steady equity growth curve. So this account, again, it's a three-stage, phase one, phase two, phase three. I think it's the E8 track account. So phase one, you have a 10% profit target. Phase two, you have a 5% profit target, and phase three, you have a 5% profit target. So for this one, I just need one more win. If the next trade I take on this account is a winning trade, I'll pass this account because for this one, my average winning trade is like 3,500. So if I take a win on my next trade, then this account will be passed. And then I'll go to phase two, have a 10%, 10K profit target of 5%, and then phase three, have another 10K profit target. And then that should be it. But you can see also the idea of some of these accounts. So, again, looking at it in the bigger picture, so it's taken me about, let's call it, fingers crossed I passed this account, but let's assume I pass this account today. I'll have made 20K in 30 days, right? So, and this is the analogy you need to look at in trading, like the bigger picture. So that's 20K in 30 days. So 20K in 1 month in one account. So for me, keep in mind, I have 9 accounts. Most of them are 200K accounts. Some of them are 100K accounts. But 20K in 30 days. Okay, now let's assume I pass phase one, phase two, and phase three. Let's assume it takes me a month to pass phase two, even though it's half profit target, but let's assume I take a month to pass phase two, a month to pass phase three. That is 40,000 in 3 months, right? And then let's assume once I'm funded with this account, Just think about that. You're making 40K in about 3 months. So even cut that down to say 20K in 3 months. If you divide that by three, it's about 7,000 per month on one account on one 200K. Then you continue stacking your account. So for somebody like me, I have like we said what 14 accounts. So if I'm making on average, and that is on the low end, 7K per month per account, um, that is 14 times 7, or let's even call it 5K per month per account, just to, even be more conservative. 5K per account times 14, that is 60,000 a month. If you even want to cut that down lower, so like if I'm once I finish most of these challenges, because some of them are funded accounts, if I just decide I want to make 1,000 per account, and I do that multiply by 14, that is 14,000 per account. 14,000 times, I only trade like about 10 months in a year. That's 140K in a year, right? So of course for me it's higher than that because my profits are higher. But it just goes to show, like, once you find a strategy that's consistent and that's giving you good consistent returns, like, your work is now just to scale up. So for example, for me right now, since I've already passed two phase one accounts, I'm looking to add more challenges starting next week. I really don't want to trade any challenge this week because we have FOMC today. I mean, I don't want to start new challenges this week because we have FOMC today. We have NFP on Friday. So for me, since I've already passed phase one on this, what I'll do, I'll get two more challenge accounts. I think I'll get one other one with top tier trader, and I may get one with alpha trader, but not the. I'm not gonna get the one you pay after you finish. I'll just get the regular one. And for me, I think most of the accounts I'm looking to trade are the ones that allow you to copy trades, because like for me, top one does not allow you to do copy trading after you pass or after you're funded. So I think this one eventually I'll just end up manually trading it on and off. But yeah, so just keep that in mind. And most of these trades, the beauty with most of these trades, we have taken them during the live session. So if you take, these trades with me during the live session, like, you can easily pass. It might take you a month, might take you 2 months, but depending on the risk level you're putting, you should be able to easily pass challenges just by taking the same trades as I'm taking. And so for today, of course, no live trades. Yesterday we didn't have any live session. Wait, when did we? So Monday we didn't have a live session. Yesterday we didn't have a live session. Yesterday was actually a good morning session, even though we didn't have anything. We didn't have a live session, but there were three back-to-back winning trades that I took. So no trades this week so far, no official trades. Currently we are just at break even for the month with our official trades. But you can see, like, if you literally take any trades with me this whole year, if you started a challenge with me, so this year for the official trades, 0.75, so this is break even around April. In May we had 6% gain. In June we had 6%, so that is 12.75% so far for the year. So, you know, that's pretty good so far. But yeah, so right now I think price will just keep consolidating maybe until the afternoon session. So there's really nothing to take here for this morning session. If I do have time, I will do a stream during the afternoon session. Yeah, I think we can do a live stream in the afternoon session, and then we can see if we do find any trade. So you can see this today we saved ourselves a losing trade here, that we would have lost the trade that would have been on the 15-minute SAR here, and price is coming back down. So we still have our three maximum trades we can take in the afternoon. So we'll see how the afternoon goes. Again, I'll let you guys know if we do have, if I do stream the FOMC session, which I think I will. But anyway, other than that, I will see you guys later. If not, I will see you guys tomorrow. Yeah, tomorrow we'll have a live session. So I'll see you guys tomorrow if I don't talk to you guys.